Smart money is quietly fleeing 6 American states, and if you're holding property in these financial death traps, you could lose everything. While the mainstream media focuses on national trends, the data shows a systematic wealth destruction happening in states where property taxes, insurance costs, and economic fundamentals are creating perfect storms for investors. Folks, what we're seeing in these 6 states reminds us of the early warning signs before major market collapses. The difference is, this time, it's not just about housing bubbles. It's about fundamental economic forces that are making entire states uninvestable. The smart money, the institutional investors, the hedge funds, the family offices, they're not just avoiding these states, they're actively liquidating their positions. And if you're a regular investor or homeowner in these markets, you need to understand why before it's too late. Let us walk you through 6 states that have become financial death traps, and more importantly, what this means for your wealth and investment strategy. Because what's happening in these states isn't just a regional problem, it's a warning sign for the entire American economy. The first state that should terrify any serious investor is New Jersey, and the numbers are absolutely devastating. According to the latest data, New Jersey has the highest property taxes in the entire United States, with an effective rate of 2.23% of home values. That means if you own a $500,000 home, which is below the median in many New Jersey markets, you're paying over $11,000 per year just in property taxes. But here's what makes this even worse. The median home price in New Jersey hit $565,000 in early 2025, up 13% from the previous year. So you're paying more for properties that are already overpriced and then getting hammered with the highest property taxes in America. The cost of living index in New Jersey is 114.2, making it the 11th most expensive state in the nation. What's really concerning is the trajectory. These aren't temporary spikes, they're structural problems that are getting worse every year. Local governments are trapped in a cycle where they need higher taxes to fund services, but higher taxes drive out residents and businesses, which means they need even higher taxes on the remaining population. But the economic dangers are just part of the story. New Jersey also faces serious physical risks that most investors completely ignore. The state sits directly in the path of major hurricanes and nor'easters that can cause billions in damage. Hurricane Sandy in 2012 caused over $30 billion in damage in New Jersey alone. The state also has some of the worst traffic congestion in America, which isn't just an inconvenience, it's an economic drain that reduces property values and quality of life. The average New Jersey commuter spends 31 minutes each way getting to work, and that's in normal conditions. The second financial death trap is Connecticut, where the combination of crushing taxes and economic stagnation is creating a perfect storm for wealth destruction. Connecticut's property tax burden is among the highest in the nation, with mill rates in cities like Middleton exceeding 30 mills. The state's pension debt totals $40.8 billion, $22.7 billion for state employees, and $18.1 billion for teachers. And this massive liability is driving much of the tax burden. Despite some recent improvements, experts warn that taxes could rise even further if fiscal guardrails are loosened. What makes Connecticut particularly dangerous for investors is the demographic death spiral. The state has been losing population for years as residents flee to lower tax states. When population declines, property values stagnate or fall, but the tax burden remains the same or increases. You end up paying more for assets that are worth less. The physical dangers in Connecticut include severe winter weather that can cause significant property damage. The state regularly experiences ice storms, blizzards, and nor'easters that can knock out power for days or weeks. The 2011 October snowstorm left over 800,000 residents without power, some for more than a week. Connecticut also sits on several active fault lines, including the Stamford-Peekskill fault system. While major earthquakes are rare, the state has experienced damaging quakes, including a 5.1 magnitude earthquake in 1985 that caused millions in damages. The third state that's become a financial death trap is California. And while this might surprise some people given California's reputation, the data tells a clear story. California lost 62,600 residents to domestic migration in 2024, continuing a multi-year trend of people fleeing the state due to high taxes, regulatory burdens, and cost of living. The median home price in California is now over $800,000, making home ownership impossible for most middle-class families. Property taxes, while not the highest in percentage terms, result in massive bills due to high property values. A typical California homeowner pays over $6,000 annually in property taxes. But the real financial danger in California comes from the regulatory environment. The state has implemented rent control laws, environmental regulations, and zoning restrictions that make real estate investment increasingly difficult and unprofitable. The combination of high acquisition costs, regulatory constraints, and tax burdens is driving institutional investors to other markets. California's physical dangers are well documented but often underestimated by investors. The state sits on multiple active fault lines, with the San Andreas Fault capable of producing earthquakes exceeding magnitude 8.0. The 1994 Northridge earthquake caused over $20 billion in damage, and experts warn that a major earthquake in the San Francisco or Los Angeles areas could cause hundreds of billions in losses. Wildfires have become an annual catastrophe, with insurance companies either dramatically raising premiums or refusing to write policies in high-risk areas. The 2024 insured losses from California wildfires, particularly the Palisades and Eaton fires in Los Angeles, are estimated to be between $20 and $25 billion, with total economic losses potentially reaching $150 billion. Please take 2 seconds to help me out and hit the like and subscribe if you find this video interesting so far. Each like, subscribe, and share helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, let's continue. The fourth financial death trap is Louisiana, where the combination of low property taxes is more than offset by skyrocketing insurance costs and economic instability. While Louisiana's property tax rate of 0.55% ranks among the lowest in the nation, homeowners insurance has become prohibitively expensive due to repeated hurricane damage. The average homeowners insurance premium in Louisiana reached $13,937 in 2025, representing a 27% increase from 2024. Over half of Louisiana residents struggle to find homeowners insurance in the past year, and the state-run insurer of last resort has grown over 400% since 2017. These crushing insurance costs effectively add over $1,100 to monthly housing expenses. The economic fundamentals in Louisiana are also deteriorating. The state's economy remains heavily dependent on oil and gas, making it vulnerable to commodity price swings. Hurricane damage repeatedly disrupts key industries, causing job losses and economic instability that affects property values. Louisiana faces some of the most severe physical dangers in America. The state is losing land to sea level rise at an alarming rate, with some areas losing 25 square miles annually. Hurricane Katrina demonstrated the catastrophic potential, causing over $125 billion in damage and displacing hundreds of thousands of residents. The state also has one of the highest crime rates in America, with New Orleans consistently ranking among the most dangerous cities. This creates additional risks for property owners and reduces long-term property values. The fifth state that's become uninvestable is Florida. And this might shock many investors who still see Florida as a growth market. While Florida has shown some recent stabilization in insurance costs, with rates rising only 0.3% in the first quarter of 2025, the average homeowner's insurance premium now ranges from $2,625 to $5,409 for a $300,000 home, depending on the region. The 2024 hurricane season caused $41 billion in insured losses from just two major storms, Hurricane Helene and Hurricane Milton. While the insurance market remained stable, the repeated billion-dollar disasters are creating long-term structural problems that make Florida increasingly risky for investors. Florida's physical dangers are intensifying with hurricanes. The state faces increasing risks from hurricanes, flooding, and sea level rise. Miami-Dade County alone has over $15 billion in property at risk from sea level rise by 2050. The state also has the highest number of lightning strikes in America, causing hundreds of millions in damage annually. Florida's wildlife presents unique dangers that most investors don't consider. The state has the largest alligator population in America, with over 1.3 million alligators. Alligator attacks, while rare, do occur and can result in significant liability for property owners. The state also has venomous snakes, including the eastern diamondback rattlesnake, and is home to the invasive Burmese python population that's disrupting ecosystems. The sixth and final financial death trap is Alaska, where the combination of extreme costs and physical dangers creates an almost impossible investment environment. Alaska's cost of living is 33% higher than the national average, with housing costs 28% above national levels. The average rent for a one-bedroom apartment is $1,600, and groceries cost 27% more than the national average. Single-family home prices in Alaska reached nearly $514,000 in 2024, but the limited market and harsh conditions make these properties difficult to sell or rent. The state's remote location means that maintenance and repairs cost significantly more than in the lower 48 states. Alaska's physical dangers are unlike anywhere else in America. Winter temperatures can drop to 60 degrees below zero, with some areas experiencing 24 hours of darkness for months. These extreme conditions cause significant wear on buildings and infrastructure, leading to higher maintenance costs and shorter building lifespans. Wildlife dangers in Alaska are severe and real. The state has the largest brown bear population in America, with over 30,000 bears. Bear attacks, while uncommon, are a genuine risk that affects property values and insurance costs. Moose are actually more dangerous than bears, causing more injuries and deaths annually. The state also has wolves, which can pose risks in rural areas. Now, here's what all of this means for you as an investor or homeowner. These 6 states represent over 100 million Americans and trillions of dollars in real estate value. When smart money starts fleeing these markets, it creates opportunities in other states, but also warns of broader economic problems. The data shows a clear pattern. High-tax, high-regulation states with significant physical risks are becoming uninvestable. The combination of crushing tax burdens, regulatory constraints, insurance costs, and natural disasters is creating a perfect storm that's destroying wealth. For current property owners in these states, the window for selling without major losses is closing rapidly. Every month you wait, you are competing with more sellers who are reaching the same conclusion. The smart money has already started moving, and retail investors who wait too long will be holding depreciating assets. For investors looking for opportunities, this exodus is creating incredible opportunities in states with lower taxes, reasonable regulations, and better economic fundamentals. States like Tennessee, Texas, Florida in select markets, and North Carolina are seeing massive inflows of both people and capital. The most important thing to understand is that this isn't a temporary cycle. These are structural changes that will reshape American real estate for decades. The states that adapt by reducing taxes, improving regulations, and addressing physical risks will thrive. Those that don't will continue to see wealth destruction and population exodus. If you found this video interesting, please subscribe, share, and watch this one as well.